Good evening, ladies and gentlemen, and welcome to the Tax Audit Brain Trust Your Questions, Our Answers webinar. I am CA Rashi Tagra, your Master of Ceremony for this enlightening session. With my background in accounting and taxation for 14 years, I am thrilled to guide you through this important topic. Today, we have distinguished panel of experts ready to tackle your tax audit queries. We encourage your active participation. Drop your questions and comments in the chat section, and we will address them in real time too. Our goal is to provide valuable insights and clarity of tax audits, ensuring you leave this webinar better informed and empowered. So let's dive in, engage, and make this productive and interactive session. Thank you for joining us, everyone. But before we dive in, let me introduce you, our esteemed speakers, moderators, and provide a brief profile of what to expect today. Now, please welcome CA Chandrasekhar Vasant Chitaleji, Vice Chairman of Tax Audit Quality Review Board, is an accomplished professional with a diverse range of qualifications and experience. He holds a BCom degree and an LLB degree and is a fellow chartered accountant. Notably, he has served as a member of Central Council of Institute of Chartered Accountants of India. For 2 consecutive terms, he has served as a member of Central Council of the Institute, spanning 2019 to 22 and 22 to 25. Currently, CA Chandrasekhar Chitaleji has held significant positions within the ICAI as chairman of the Ethical Standard Board and vice chairman of the Taxation Audit Quality Review Board. He is also former chairman of Direct Tax Committee, Peer Review Board, and Corporate Laws and Corporate Governance Committee. He has also authored publications including User Guide on Tax Audit, VDIS, and Service Tax for Professionals. C.H. Chandrasekhar Chitaleji has received recognition for his writing, including a prize for the best article in the PCAS journal. Now I will invite C.H. Chandrasekhar ji to provide his opening remarks. Over to you, sir.
Thank you, Rashi. Friends, we are once again having this last session before 30th of September, the D-Day for the purpose of tax audit uploading. There are various issues which are coming up. So those issues we decided to address. Since June, we are carrying on this particular series. In fact, today itself, I received a query that supposing the tax audit report is uploaded on 30th of September, however, it is accepted on 1st of October, then what would be the outcome? So such type of practical queries keep on coming. And at TAQRB, it's our endeavor to resolve those queries, to address those queries to the best our possibilities. And I'm sure that considering our deliberations at Tax Audit Quality Review Board, we are able to address those queries satisfactorily. Till now, we had, this is the last of this 2.5 months journey. Of course, although we say that this is last, it is not a full stop, it would be comma. And under the able chairmanship of CA Dr. Raj Chawla, we would think of some other programs in the coming months. And our work relating to this quality review of tax audit would always continue. Maybe chairman would like to tell you about the enrollment as tax audit quality reviewer, because you might be aware that whatever tax audit reports you have submitted, out of them, some are selected by TAQRB in an objective manner by following the procedure. And then those tax audits are reviewed for any error, any mistake. And then those errors or mistakes are classified into 3 categories. And if it is very serious, then maybe the TAQRB is required to refer those reports to the disciplinary committee for further action. So in order to avoid this unpleasantries, we have started this series and we will continue. Of course, if you want to be engaged with TAQRB as a tax audit reviewer or maybe as a panel member of tax audit board group, then you can certainly engage with us. And chairman, you can brief about these 2 assignments. With this, maybe our work would be further facilitated by all of your participation. And as Rashi has stated, we have received so many queries, but still, if you have any queries, you can put them in chat box and then we will be able to deal with them. Thank you.
Thank you so much, sir. Thank you for your valuable time, sir. Now, ladies and gentlemen, please welcome CA Dr. Raj Chawla ji, Chairman of Tax Audit Quality Review Board. He is a practicing chartered accountant since 1992, specializing in areas such as income tax, auditing, cost audit, and XBRL. His impressive qualifications include Chartered Accountancy, Company Secretaryship, Cost Accountancy, Diploma in Information System Audit, Bachelor of Law, member of the Institute of Management Accountants USA, peer reviewer, PhD in International Finance, Associate of Institute of Chartered Accountants in Australia. He also holds a BCom honors degree. In terms of professional contribution, CA Dr. Raj Chawla ji is an active member of various professional bodies and organizations. He serves as a Central Council member of Institute of Chartered Accountants of India and has held leadership roles such as Chairman of UDIN Directorate, Chairman of Tax Audit Quality Review Board, and Vice Chairman of MSME and Startup Committee. He was also the Chairman of NIRC of ICI in 2015-16. Now I will invite CA Raj Chawla ji for a welcome address. Over to you, sir.
Thank you, Rashi ji. Good evening to all. So, friends, first of all, I welcome to all of you in this series of webinar organized by our TAQRB, and I'm happy to share that today is the 17th and last webinar on this tax audit. We have already conducted 16 webinars since June 23. So my dear fellow colleagues, I welcome you all in a very important webinar on tax audit brain trust. Your question, our answer. Today we are going to discuss various questions and answers with respect to preparation and filing of tax audit report, which will help the members in performance of their professional assignment of tax audit. As you all may be aware, our last webinar was on brainstorming session, and we have received many further queries from members, and we are happy to be here today to help our members to perform the same. It becomes very important to conduct the tax audit carefully and report the details appropriately at its ensure compliance with tax law and regulation and help to identify discrepancies or error in the financial statements and tax returns of business. Our today panelist for the webcast is CA Chandrasekhar Chitleji, my tax guru, and myself for answering various questions during this session. We are also having CA Vikas Katyal ji and CA Abhishek Aneja ji as moderator of this question and answer, and CA Rashi Tagra ji to help out for this organizing this program, and team our TAQRB. So friends, I am confident that today webinar will be a valuable addition to our professional knowledge. Thank you.
Thank you so much, sir. Thank you for your valuable time. Now I will introduce our one of the moderators today, CA Abhishek Aneja. He is a fellow member of the Institute of Chartered Accountants of India and a registered valuer for securities and financial assets, recognized by Insolvency and Bankruptcy Board of India. He specializes in providing advisory, compliances, and representation services in taxation, assurance, business, and risk advisory. His areas of expertise include valuations, direct and indirect taxation, transfer pricing, international tax, audits, RTI, and insolvency matters. Welcome, Abhishek ji. Let's meet our another moderator of the day, CA Vikas Katyal. He is a fellow chartered accountant with over a decade of experience since becoming a chartered accountant in 2008. He specializes in direct tax, indirect tax, international taxation, auditing, including statutory audit, internal audit, and tax audit, as well as assessment proceedings, accounting, and finance. Welcome, Vikas ji.
Thank you.
Lastly, I would like to share that this webinar is for our participants and your participation is the key. So don't hesitate to engage with us through the chat, submit your questions, and take full advantage of this opportunity to enhance your understanding regarding tax audit. Now, without further ado, let's get started with our tax audit brain trust, your questions, our answers webinar. But before handing over to our moderators, Raj sir and Chitra sir, I have a question. Is there any chance that tax audit date is going to be extended by any chance, sir?
I think there are very little chance that date may extend. Otherwise, there is no reason that the date should extend. And we should, I always say that in the extension of date, only loser is professional, because government is getting the interest and penalty, assessee is getting the time, but chartered accountant is only sufferer, because that work which is to be completed on 30th September, he has to complete on extended date without any extra fees. He will get the only that fees. So it is not advisable to our professional brothers, sisters, that date should extend. And I request our Chitle sir to give some lights, because last year when he was the chairman of Direct Tax Committee and myself was the vice chairman, then our institute decided that we will not go to the government for this extension of date without any reason. Because every time we understand that people want that date should be extended everywhere. So, Chitle sir, your comment, please.
Yeah, you're right that we have written to the Central Board of Direct Taxes that henceforth the Institute of Chartered Accountants of India will not be begging for any time for the purpose of tax audit or any other matter. Actually, it happened that on 31st of December, when the due date was extended, and that was the last due date for furnishing returns of income during COVID period for non-taxed entities. So one of my friend, who is also a chartered accountant, was trying to contact his client for last 2 days. And then maybe noticing the missed calls on 31st of December, in the morning, he received call from the assessee, who was his client. And he said that there are certain queries, can you please come, because unless you address those queries, we will not be able to furnish the return of income. He said, no, what are the queries? Because I can't come. I'm enjoying the holidays on beach of Goa. So, the assessees are not bothered about their obligations. And more tension is carried by chartered accountants. We see some of the chartered accountants consuming their life because of heart attacks and such other things. So that makes us introspect that what for the extension and why we should carry tension of the assessee. In fact, if the due date is extended, as rightly pointed out by Rajbhai, your costs increase, because maybe what work you should have done by end of September, end of July, you will be doing it subsequent to 3 months. So your costs will certainly increase. But you ask yourself a question whether your fees will increase. The answer is no. Therefore, ultimately, your contribution will reduce and you will be the loser with the extension. So should ICAI promote the activity which will put chartered accountants as a fraternity to loss? The answer is obvious. Secondly, as far as our time is concerned, it's also necessary that we have to update ourselves. We have to attend seminars. We have to read the books. We have to read the latest case law. So where from we will get the time? So that time will be available once the things get accomplished by due date. In fact, for the purpose of clients also, we should tell that, okay, you should give for tax audit maybe by month of May, June, because even when the listed companies are able to announce their reports in the month of May or June, why the unlisted ones and why the assessees are not able to do so? So we should have to train them for being regular. So what we have stated is, don't take any tension, work with pleasure so that you can accomplish it within time. If it doesn't happen within time, what is the consequence? Consequence is penalty maximum rupees 1,50,000. Does it go from your pocket? The answer is no. It goes from the pocket of client. So I am willing that 1.5 lakh penalty should be increased to 15 lakhs so that clients will come to you in the month of April, May, because they don't want to pay 15 lakhs. Maybe 1.5 lakhs is something which they can bear. So these are the things that which we have to bring to mind. And once when we submitted this particular letter to the CBDT, I'm sure that we submitted somewhere in the month of July, and immediately in the month of August, the tax audit records started trickling in the offices of chartered accountants, many of friends informed. So let us keep with it. We will not apply for extension. There is no reason. Of course, when we have given letter that we shall not claim extension as ICAI, that is with a caveat that you should come out with tax audit report with schema and everything by 1st of April of each assessment year. And those schemas should not be changed till September, so that we are not required to do the work again and again. Of course, as far as ICAI is concerned, it is keeping its promise. As far as the other side of the table is concerned, whether they are keeping their promise or not, I think everybody is the best judge. Thank you.
Thank you, Chitle sir. I remember last year when you are the chairman of Direct Tax Committee, then you given a tagline, work with pleasure, not pressure. This
Yes.
was your tagline. So I
That
remember
appeared in Economic Times also.
that was in the economic time also. Yes. That was your interview. Thank you,
Yeah.
sir.
Thank you.
Thank you, both of you, sir, for explaining it so nicely. Now I'll hand it over to our moderators, CA Abhishek Aneja and CA Vikas Katyal, to kick off things with some foundational insights. Over to you, Abhishek ji and Vikas ji.
Ahead of Abhishek ji and Vikas ji, I have one query. Number of chartered accountants are asking me कि यूडीन को बहुत टाइम लगता है, तो राज भाई being convener at UDIN, I think some word on UDIN before we start would be in place.
Thank you, Chitle sir. This year, our president of ICI has given me this responsibility as a convener of this UDN directorate, and I am very happy to be the chairman and convener of that directorate. And I am learning so much from that committee. And you will be happy to know that these days, since last 3 days, number of UDNs generated in a day are 2.5 lakh approximately. And I also wants to update our members that till today, we have crossed 5.5 crore number of UDNs, which is generated by our members. So this is the statistics of our UDN, and we are working in a very speedy way. And we are always available to the members. If the website is slow, we are always available, sir. So I think today there is no guidance from the part of members. So UDN website is working well, sir.
Yeah, in the afternoon confirmations came that now it is working properly.
Yes.
Earlier it was taking some time because
Yeah,
usually in a day there would be 10,000, 20,000 units, and out of a sudden, if more than 2 lakh units are getting generated in a day, the system also comes under pressure. But then still proactively working, the chairman here, Dr. Raj Chawla, is also increasing the bandwidth and not allowing chartered accountants to have any inconvenience. Thank you for that.
One thing I also want to update the members, and you also being the council colleague, that being today we have generated more than 5.5 crore UDNs, and all the UDNs are on our website. So I have requested the institute that the previous UDNs of the previous years, that should be transferred to archives, so that the pressure on the main our server will be lower.
Yes.
So in the coming meeting on 4th of October, our agenda will be taken care of. And after that, after this transferring to the archives, our UDN server will work more effectively, sir.
Thank you.
Thank you, sir.
Good evening, Raj
Over
sir.
to you, Abhishek.
Sir, number 21B.
Yes.
The query is that we are changing the provisions already existed on the opening date, and then making necessary adjustments by reversing the provision or actual payment of the bills. So further, also we are adding new provisions during the year. In this scenario, we have few vendors who are identifiable and few vendors who are not identifiable. We book provision on ad hoc basis. Now, how to report that in tax audit report?
See, we are talking about year-end provisions, not provisions which are made in rather uncharitable, because to whom you have work done, maybe 100 vendors, maybe 1,000, all are identifiable. Only what is missing is the exact amount for which the provision is to be made. So maybe provision is made on an ad hoc basis. In such a case, I believe that the TDS attracts, and if the TDS is not made, one will have to report it. Now, there are certain cases where the payee was not identifiable, and that is the case of in IDBI Bank. When the IDBI issued debentures or bonds, these are fungible securities. if it is, say, a cumulative debenture for maybe 5 years, then the interest will go is going. And in those cases, the IDBI did not deduct tax from interest. And when the penalty was charged, they went before the tribunal. And tribunal has taken a view, since the pay is not identifiable, it would not be appropriate to deduct the tax and to follow the formalities. But in other cases, as we talk of vendors, the exact amount to that vendor, whether you'll be paying 1,20,480 or whether you'll be paying 1,30,620. So maybe on an average basis, if you make a provision, I believe that it follows that deduction will have to be made. And if it is not made, the chartered accountant is expected to report it in the tax audit report. What is not required to be considered is, say, for the quarter end, for the month end, you are preparing financial statements for MIS purposes. And for MIS, supposing you make provision for, say, a contractor ad hoc provision of 50,000 rupees, and then you reverse it on the next day. So these are called as reversible provisions. They are made only for the purpose of MIS. And there the judgments are available. If such provisions are made only for MIS, then the liability may not trigger. But at the year end, that should not be the case. And if you consider more time is given for the purpose of payment of TDS at the year end, earlier it was 2 months, now it is 1 month, as opposed to 7 days in other cases. So that is the reason that why more time is given for paying year end TDS. Thank you.
Thank you, sir. Next question is for Raj, sir. Sir, this is very simple question and crucial question actually. What are the
excuse me.
documents?
Yeah, एक्चुअली टेक्निकल टीम से बोलना चाह रही थी कि वहां पर ना प्रॉब्लम आ रही है, यूट्यूब पर ना आवाज बंद हो रही है और फिर आ रही है, तो प्लीज इसको थोड़ा सा चेक कर लेंगे.
Okay, thank you. Technical team.
Technical team, please kindly take care. In YouTube, there is a problem that the voice is not coming clear. Okay, thank you.
Raj, sir, what are the documents to be kept ready before conducting a tax audit?
Very important question, not a simple, because most of our auditors are not taking care of, and their case is taken in this disciplinary committee. Then they come to know that they have to maintain the files and documents. So my suggestion to all my fellow colleagues that please note down the important documents which are required for conducting this tax audit. First is the MRL. As we are the tax auditor, we have to take the MRL from the management. There is a very important clause in the Tax Audit and Company Act that the auditor has to report on the MSME outstanding payment. How you can come to know that which payment is related to MSME and which is not? So you first take the management representation letter from the management that which are the payments pending towards MSME. Second, appointment letter. And appointment letter should be defining your scope of work. We take only appointment letter. We should mention that what is the scope of my work. Whenever these investigation agencies take cognizance in any case, if you don't have the scope of work, then they consider that you are taking care their all activities. So please get it done. That scope of work should be defined. List of related party and transactions. This list we must have. Trial balance. Trial balance signed by the assessee. Financial statements duly signed by the assessee. Statutory compliances like TDS, GST. Liability including contingent liability estimations and notes on nature of business. So these are the documents which auditor must take care of before conducting this audit. Thank you.
So my question is to Chitle sir. Sir, as per ICAI's, ninth edition of Guidance Note on Tax Audit under Section 44 AB of the Income Tax Act 1961, which has been released on 1st September 2023. The para 47.9 reporting under clause 27 has been restricted for only those SSEs who deal in petroleum products, crude, diesel, petrol, aviation turbine fuel, natural gas, and tobacco products, which means the details of ITC under the GST regime should not be given if the SSE deals in other than these products. However, as per the utility file downloaded from the income tax website, the word ITC is still there. So please clarify for the above.
Before I respond, please read clause 27 in income tax forms.
Sir, clause 27 is
Yes.
talking about amount of central value-added tax credits availed of or utilized during the previous year and its treatment in the profit and loss account and treatment of outstanding central value-added taxes credits in the accounts. Clause B, particulars of income or expenditure of prior period credited.
No, the question is on A only. So whether the word GST, ITC appears in this particular question? It does not.
It does not.
So what is form? Under the Income Tax Act, under Section 119 and other sections, the Central Board of Direct Taxes is authorized to issue forms. Accordingly, they have issued Form 3CD for the purpose of getting particulars of required particulars under tax audit. These forms are not only issued by the CBDT, but they are notified. They are placed before both the houses of Parliament, and then they become piece of legislation. Now, when the legislation does not ask me to report on GST, how the GST question can be asked? Now, whatever schema is there, whatever form is there online, it is not a part of legislation. It is administrative decision of the Central Board of Direct Taxes and the software provider. So while providing that software, if you insert something, will it get character of law? The answer is no. It will not get the character of law. So whatever is beyond law is not binding. There are various decisions that Central Board of Direct Taxes cannot enlarge the responsibility of an assessee. They can give benefits. So here it amounts also to enlarging the responsibility, which is not within the ambit of CBDT. They can amend the form, they can very well ask, but they have not amended the form. Without amending the form, this is not possible. And for your information, last year myself and Rajbhai were there on Direct Tax Committee. We have taken this view, and this year the view has continued. So it is not that now view was taken last year.
Thank you, sir. My next question is for Raj Chawla, sir. So there's a question like, can a chartered accountant who is engaged in a part-time practice, can he perform the tax audit functions?
No. Although the Income Tax Act says that tax audit can be performed by a chartered accountant, but that chartered accountant should be full-time practicing chartered accountant, as decided by the ICI Council in its 242nd Council meeting, that with effect from 1st of April 2005, any chartered accountant who is not holding the full-time COP cannot conduct any attestation function. They can give consultancy, but they cannot sign any document like balance sheet, tax audit, any other audit. They can give only consultancy. So to get the tax audit from a chartered accountant, that chartered accountant must have full-time COP, certificate of practice. Only then he can sign the tax audit. Otherwise, part-time COP holder cannot sign the tax audit.
Thank you.
Rajbhai, you appropriately addressed the issue. Only just to remind the audience, कि 30th September is the last day for the purpose of making payment of fees. अगर आप फी नहीं करोगे तो आपका नाम कट जा सकता है इंस्टीट्यूट के लिस्ट से, and that is provision of Chartered Accountants Act. So we also cannot do anything about it. So if anybody has not paid fee up to now, I think tomorrow is the last date.
Thank you very much, sir, for reminding. The next question is for Chitle, sir. In case of an individual, in case his turnover is 1.5 crore, and we are claiming deduction under section 80IA, and we have filed form 10 CCB. Receipts and payments are less than 5% in cash, so tax audit is not applicable. Now, whether the due date of ITR is 31st July or 31st October?
See, if audit is applicable under any law for a time being in force, then due date is 31st of October. And here, the tax audit is whether that particular provision is subject to tax audit, subject to certification.
This is not not required to be.
Because 80IAB is not, IBA is not requiring audit. 80IA requires different certification.
Yes.
By chartered accountant. So if it requires certification by chartered accountant, the due date will be 31st of October. 80IAB, where IBA, that new section of housing, etc., it does not require any audit or any certification. So had it been that case, then 31st of July. But if it is not that case, if audit is required under 80IA for the provision under which the deduction is being claimed, then the due date will become 31st of October.
Okay. Thank you, sir. Next question is for Raj, sir. I think many of CAs are not very clear about the clause 44.
Yes.
So please enlighten us on the reporting for part of the clause 44 in form 3CD. And if it is possible to make bifurcation, if it is not possible to make the bifurcation, how the tax auditor should report it in the 3CD?
Yes. Actually, the guidance may be taken from the headings of the table, which start with the word breakup of total expenditure. And hence the total expenditure, including purchases as per the format under clause 44 of the form number 3CD may be given. It appears that head-wise, nature-wise expenditure details are not envisaged in this clause. Depreciation under section 32, deduction for bad debts under section 36(1)(7), etc. are accounting expenses in the nature of non-cash charges on the profit and loss account should not be reported under this clause in any of the columns from 3 to 7. Headings of column 3 to 6 and column 7 require reporting of expenditure in respect of entities registered under GST and expenditure relating to entities not registered under GST respectively. Thus, the expenses which are within the scope of GST, which tantamount to supply in terms of section 7 of the CGST Act 2017 and only required to be reported under this clause in any of the column from 3 to 7. For example, Schedule 3 of the CGST Act list out activities or transactions which are treated neither as a supply of goods nor a supply of services, and thus expenditure incurred in respect of such activity need not to be reported under this clause in any of the column from 3 to 7. For example, para 1 of the schedule 3rd covers services by an employee to the employer in the course of or in relation to his employment, and thus remuneration or employees need not be reported. So it may be noted that the expenditure that is incurred wholly and exclusively for the business or profession of the assessee qualifies for the deduction under this act. Registration or otherwise of the payee under the GST Act has no relevance in considering allowability of the expenditure.
Thank you. Thank you,
सर.
sir.
ओनली क्वेश्चन जब पूछा तो उन्होंने कहा कि बहुत से सीए को पता नहीं है, बट असेसिंग ऑफिसर को भी पता है कि इसका क्या इंपॉर्टेंस है, या वो पूछ सकते हैं क्लॉज, बिकॉज द लास्ट पैराग्राफ व्हिच राज भाई हैज रेड, that the allowability or otherwise of expenditure does not depend upon whether you have purchased it from registered dealer or unregistered dealer. If you have paid by account, pay check, etc., in business incurred business expenditure is incurred for business, it is allowable. If you consider the authority of CBDT under section 44AB, they should draft form in such a manner that will help the income tax assessment. So the question is whether this clause helps in any way in assessment of income. To my mind, it does not. Therefore, perhaps this clause is beyond jurisdiction of CBDT to ask. So if any issue arises, if any penal provision is made, I think first thing professionals should remember that they should question the very authority of CBDT to ask this question. This may be relevant from the perspective of GST, that who are the dealers who are not registering, etc., etc. For GST, it may be useful, but not for income tax law. So on that basis, we have, and that is the reason that this particular sentence is included in a commentary and tax audit guidance note under clause 44. Thank
Okay, thank you, sir. Thank you.
Thank you, sir. So, Chitra sir, my question is to you. Sir, this is happening a lot that some people upload the balance sheet and the profit and loss account by mentioning the SD instead of physical signing. And because they say that the digital signature is required to be uploaded when the audit report is filed. So is it mandatory to upload the audit report and final accounts by physical signature of the signatories, or can the SD can also work?
See, as far as this section 44AB is concerned, section 44AB requires the assessee to furnish tax audit report. Section 44AB does not talk of audit report or financial statements to accompany the tax audit report. If you consider Rule 6F relating to this forms, etc., they said that the form is prescribed. So they have prescribed form 3C and 3CD or 3CB and 3CD. So those forms are required to be uploaded. As far as Act is concerned, Quad Tax Audit Act is silent. As far as section 139(9) is concerned, which talks about defective return, in case of defective return, they have included that if you don't furnish balance sheet, etc., if you are maintaining books of account, then the return will be defective. Similar provision is not there in case of tax audit. But if you look at procedurally, the procedural requirements require you to attach those balance sheets, etc. But if supposing balance sheet has not been attached, what will be the consequence? I don't see any consequence if balance sheet is not attached. So similarly, if it is attached with SD, I see no consequence. I believe that that is not required under the law, but still he has furnished it, so be it. Because at least in law, either in the act or in the rules, there is no provision which tells that if the tax audit report is to be uploaded, it has to accompany the financial statements or the audit report. Only in Form 3CA, they say that the profit and loss account, balance sheets, etc. has been audited either by me or by some other persons, and date of the report. But tax audit report do not write that we are enclosing it along with the report. So to respond to the question, I believe that if you are uploading with SD, I don't see any issue that assessing officer or anybody can object. Only it should be the same based on which subsequently you are filing the ITR.
Thank you, sir, for the clarification. It will help a lot of auditors and assessees. Rashi, I just wanted to check with you. अभी YouTube पे आवाज ठीक आ रही है?
हाँ, अभी ठीक है क्योंकि अभी मेरे पास नहीं आई क्वेरी, तो अभी ठीक है. बट चंद्रशेखर सर, मुझे एक और चीज इसमें पूछनी थी. अगर हम टैक्स ऑडिट अपलोड कर देते हैं विदाउट फाइनेंशियल स्टेटमेंट, तो भी कोई इशू नहीं होगा उसमें?
अगर इशू होगा तो क्या इशू होगा? There are 2-3 cases that the assessing officer will take a view that you have not uploaded tax audit report. Can he take the view? The answer is no, because you have uploaded the tax audit report. Now, for not complying with uploading tax audit report by 30th of September, there can be penalty up to 1,50,000. You have uploaded the report, so there cannot be any penalty. Now, you are uploading ITR. This is necessary accompaniment for ITR, because section 139(9) tells otherwise it is defective. So if along with ITR you have attached, then fine. Let me go ahead and say along with ITR also you have not attached. Then whether the return will be invalid? The answer is no. Because in that case, the return is not in compliance with the law. It is a defective return. And in case of defective return, the assessing officer has got two options, either to ignore defects and go ahead, or to point out those defects to the assessee for its correction within 30 days. So even if along with ITR you are not enclosed return of balance sheet, financial statements, still the return will be defective and not invalid. You will get 30 days to comply with the defect.
Okay, thank you, sir.
Thank you. Or Rajbhai, you can also announce with the help of office that supposing in YouTube they are not able to listen something, we will be uploading it on our website. So that particulars you can take and announce, so that अगर अभी नहीं सुनाई दिया तो 2 घंटे बाद सुनाई देगा. They can also play on our website. Maybe today, tomorrow we'll upload it.
Sir,
Anita can clarify that. Yeah.
after completing this webinar, immediately our team will upload this video on our digital learning hub of our ICI. So this and all the previous webinar conducted by our TAQRB are available on our this digital learning hub. And this will be uploaded after completion of this, our webinar, today evening only.
Thank you, Raj sir, for the clarification. My next question is to you. Whether headwise GST reconciliation is required to be given as per clause 44 of Form 3 CED?
Yes. Headwise reconciliation is required. It is must, because headings of column 3 to 6 and column 7 of the table, even under clause 44 of the form number 3 CD, require reporting of expenditure in respect of entities registered under GST and expenditure relating to entities not registered under GST respectively. Thus, the expenses which are within the scope of GST, which tantamount to supply in terms of section 7 of the CGST Act, are only required to be reported under this clause in any of the column from 3 to 7. For example, Schedule 3rd of CGST Act lists out activities or transactions which are treated neither as a supply of goods nor a supply of services, and thus expenditure incurred in respect of such activity need not to be reported under this clause in any of the column from 3 to 7. So, headwise reconciliation is required.
But that is to be kept in office file, not to be submitted.
Yeah.
And that is advisable. It is advised recommendation by the DTC, not requirement as such. क्योंकि अगर कल असेसमेंट में कोई पूछा तो ऐसा ना हो कि वो रिकंसाइल नहीं हो रहा है, इसलिए वी हैव गाइडेड कि आप रखे तो आपके लिए बेहतर होगा. बिकॉज इफ यू डोंट फॉलो द गाइडेंस नोट देन इट अमाउंट्स टू breach of code of ethics. But here, if you don't maintain it, it won't be breach of code of ethics, because this is not a mandatory condition recommended under under guidance note. It is recommendatory.
Chitle sir, next question is regarding section 40A3. In case an SSC pays an amount of rupees 2 lakh in cash to a franking vendor towards the franking charges for a deed of hypothecation of security to Exim Bank. So what will be impact on the on this?
See, hypothecation is as far as loan is concerned. So you are claiming that deduction under section 36. Now the issue is, as far as this franking vendor is concerned, who is the principal? Principal is the state government.
Yeah.
So this payment is being made to the state government. He is only a conduit to collect the whatever charges are there, because even otherwise, whatever commission is there, that commission is not paid by the client to the vendor, it is paid by the government. So he is acting on behalf of government. So this is payment of stamp duty to the government. So it is like depositing in treasury. So to my mind, it is payment to the government and therefore does not require any reporting, because it comes as an exception.
Thank you, sir. Okay. So next question for Raj. Another question on clause number 44. Why is salary specifically excluded from the total expenditure in clause 44 from 3CD?
Actually, Schedule 3rd of the CGST Act list out activity or transaction which are treated neither as a supply of goods nor a supply of services. And salary is neither a supply of good or supply of services, and thus expenditure incurred in respect of such activity need not to be reported under this clause from column number 3 to 7.
Thank you, sir.
This is a purposive interpretation because ultimately this clause is of no help for income tax. It is of help to GST. So if we report that, okay, salary paid to employees unregistered dealer because they are not registered dealer, then unnecessary work of income GST department will increase. And GST department itself has spared salaries and such other allowances from payment of GST. So in order to make a purposive interpretation, we have said what is neither considered as supply nor supply under the GST Act of services or goods need not be reported.
Sir, my next question is to Chitle, sir. Sir, is it necessary to show under clause 21, subclause E of Form 3CD regarding the provision for payment of gratuity under section 47A, clause 7, or has to show under clause 26 of Form 3CD, section 43B disallowance?
Whether it gets covered under section 47, if you make provision for gratuity, the answer is in affirmative. Whether it gets covered under section 43B, if you make provision for gratuity and do not pay till the due date or till the date you sign the audit report, the answer is in affirmative. So it is to be reported at both the places.
Thank you, sir. My next question is to Raj Chawla.
Only before that, let me tell you why people try to avoid, because the faulty mechanism of prima facie assessment under section 143(3). Whatever is reported under these clauses gets added. So supposing you have made provision of 10 lakh rupees, there would be addition of 20 lakh rupees to the returned income if it is reported at two places. But because of this mechanism of assessment, you cannot alter the manner of reporting. Supposing if you report only under 48(7) and do not report under section 43B, would that be a correct report? Because please mind, you are also certifying that particulars in Form 3CD are true and correct. So while we are conducting audit, we have to appreciate that we are sitting there as agents of income tax department and not of the assessee. So if assessee is facing this particular issue, then he has to represent, that is the maybe chambers of commerce or FICCI, they should represent before the government and not the ICAI. In fact, if those double additions are made, then what is the remedy? Remedy is the assessee can prefer rectification application, or maybe he can prefer appeal. And as a chartered accountant, you can assist. The problem is that when we assist in such a manner, we don't charge fees separately. Therefore, we feel burdensome. And if we feel that burden, we try to avoid reporting. And when we try to do so, we are not in keeping with the expectations of income tax department. Because the department has made mistake while framing their program for intimation under section 143(1). That does not mean you should also make another error to just bypass the rigor of that income tax department. So I believe that this has to be reported at both the places. Earlier, when physical submission was there, people used to recommend, even guidance notes said that you give cross-referencing, that this figure is also reported in that clause 27, etc. But now in the mechanism of uploading such cross-referencing is not possible. Still, if one wants to make cross-referencing, maybe in para 3 of Form 3CA or para 5 of Form 3CB, that mention can be made.
Thank you, sir. My next question is to Raj Chawla, sir. Sir, does non-resident SSE who is carrying out business in India and deriving a turnover of 1.5 crores from Indian business require to get his accounts audited and furnish tax audit report under section 44AB of the Income Tax Act?
Yes, because under the Income Tax Act, if your turnover is more than 1 crore, then you have to get your accounts audited under section 44AB. And under the act, the language starts that every person, it is not saying whether the person is resident or non-resident, every person carrying on business shall, if his total sales turnover or gross receipt, as the case may be, in business exceeds 1 crore in any previous year, provided that in case of person whose aggregate of all amount received, including amount received for sales, turnover or gross receipt during the previous year in cash does not exceed 5% of the said amount. So in that case, the turnover is 10 crore. If your turnover does not include cash for more than 5%. Otherwise, after 1 crore, you have to get your accounts audited under section 44AB of the Income Tax Act.
Thank you, sir. Next question is for Chitle, sir. Sir, this is regarding clause number 14B of 3CD. Shall GST impact on opening inventory purchases made during the year and closing inventory that goes to increase or decrease in profit and under section 145A of the Income Tax Act? So consider adjustment under clause 14B.
No, what is the question?
So the question is,
in clause, what is the clause?
what is the clause? So this is regarding the
ICDS वाला तो नहीं है ये.
नहीं ICDS नहीं, ये वो accounting adjustment वाला होता है ना 145A, section 145A.
So the question is whether
GST will impact or not.
there is compliance with 145A.
Yeah.
So in accounts, there is never compliance with 145A because as far as turnover is concerned, or the meaning of revenue given in terms used in financial statements published by ICAI, it says that income means revenue collected for the person. So when you are selling goods for say 10,000 rupees and collecting 11,800, you are collecting only 10,000 for yourself, 1,800 you are collecting for government. You are a conduit for the purpose of making payment to government of the taxes which are charged on the customer. So that cannot be included in your revenue. When you are ascertaining or considering expenditure, particularly purchases, if you are going to get any benefit out of the taxes, duties, etc. paid, then they cannot form part of your cost of purchases. So if you have purchased goods for 11,800, 1,800 is GST, for which we are going to get benefit as input tax credit. So your purchases also will be 10,000. And AS2 also tells that when you are valuing your inventories, they should not include any component of tax for which you are going to get any benefit. So accounts are never in compliance with 145A. So 145A is not followed, and therefore, if what is the another question which is asked in tax audit report?
The question is regarding GST. GST will impact on the opening inventory purchases.
It will, yeah, it will impact. It will impact on both.
Okay. Thank you, sir. Next question is for that, sir. Suppose the SSC is running an educational society and leasing the building for examination center and is already registered under section 12A or 12AB of the Income Tax Act. Kindly suggest whether he should file form 10B or 10 only, or 10B along with form 3CA, 3CD also.
He has to file form number 10B with form 3CA and not 3CD. Because as per the provision of Rule 16 CC of the Income Tax Act rules, the report of audit of accounts of a fund or institution or trust or university or other educational institution or hospital or medical institution which is required to be furnished under clause B of the 10th provision of the clause 23C of section 10 shall be in form 10B. And 10BB where the total income of such trust or institution without giving effect to the provision of section 11 and 12 of the Act exceed 5 crore during the previous year. So this is the provision. Then they should file form 10B along with 10CA, and they need not to file form 3CD.
Thank you, sir.
The section 1023C does not talk anything about form 3C. It does not talk of tax audit. It only talks of the audit for charitable institutions. So that there they will find 10B or 10BB. If the charitable institution is doing business, then in that case, this form 3CA, 3CB will come for business, because the asset of a charitable trust also may include business undertaking. So there, if the turnover limit exceeds whatever is prescribed in 3CB, 44AB, tax audit may be required.
Yeah, in the given that building, that educational society building is used for examination center, sir. So this is the commercial purpose they are doing.
Yeah, so what happens? There are two different sections. If it is 1023C, then different answer. The question is about section 11, 12, 13. So this may be incidental, so may not be considered as business.
Yes.
It may be income from house property, not from business again.
Sir, we have received certain questions from the live audience, so I'm going to that up right now. So
हाँ, जो सिंपल रहेंगे मुझे पूछो, डिफिकल्ट राजभाई को पूछो.
सर मैं दोनों से ही पूछ रहा हूँ, आप दोनों ही आंसर कर सकते हो. So the first question that we have received is whether the SSC has to report deemed income under section 2 clause 22 subclause E. Because he's saying that whether the loan given by private limited company to shareholders is also to be reported or not. If yes, then where?
There is a clause which says that income not credited to profit and loss account, which is income under section 28. So this 222A would be dividend income.
Yes.
So this is any other income mein aayega, any income not credited to profit and loss account. So this is dividend income not credited to profit and loss account. So under that clause it will come.
Thank you, sir. So the next question is, can the auditor make his adverse observations separately, if any, in the tax audit report, other than what has been prescribed in the columns or fields on which he is required to make comments or certify?
See, ultimately adverse comments are protecting chartered accountant. Now, supposing some figure is there in loans and advances, you have not received any confirmation statements, and you are furnishing form 3CB to delimit your liability. You mentioned that, okay, balance confirmations are not available, so third party evidence is not there. So tax audit does not say whether you want to state or not. The chartered accountant has to take a call by placing such remarks, whether he would be protecting, amplifying, or his views. And in that sense, it should be done. When in physical form, the tax audit report was issued, under each clause, the qualification was placed. Like popular one was under section 48(3). It asked whether the payment is made by account pay check. So there, usual comment which was prescribed under the guidance note, that as far as checks are concerned, since the instruments are not at the disposal of the assessee, we are not aware whether they are crossed account pay or otherwise. So that delimited his responsibility. Now, if you today answer this question relating to form payment under section 48(3) or 269 SST, etc., there is no room under the clause to mention this particular qualification or observation. So if you mention that in para 3 of form 3CA or para 5 of form 3CB, then you will be protecting yourself. Otherwise, later on, if the assessing officer finds out that some of the checks were bearer checks, not account pay checks, then will it not be responsibility of a chartered accountant who reported under those clauses without mentioning this limitation? So wherever you find that a particular amplification of your answer is necessary, or you have to delimit your responsibility, it is always better that you make observations in the para which I mentioned just now in form 3CA, 3CB. Thank you.
Thank you. My next question is, in case of audit of a construction contractor, the auditor has by mistake, he has not given the ICDS 3 disclosure in form 3CB to 3CD. And he has already filed the forms, whether he should revise the form 3CB, 3CD or not, and should he generate another UDIN for the same when he is revising the form?
I think if the mistake is pointed out, it is always better to revise. As regards Udin, I think Udin chairman will answer.
Yes, sir. Rightly said by Chitle sir, he should revise if he founds that there is mistake, and it should be reported.
वो यूडिन का भी पूछ रहे हैं ना, यूडिन लेना चाहिए क्या अलग?
Yeah, UDN also he has to revise. Yes.
So he has to generate fresh UDIM.
Yes. Because figures have been changed now.
Yes.
He has to generate. If it is within 48 hours, then he can revoke that UDN and generate new. And if it is more than 48 hours is there, in that case, he has to generate a new UDN, and he should mention in the remarks column of the UDN that earlier this UDN was generated for this audit, but due to some mistakes in the financial statement, that this new UDN is generated. So he should mark this in the remark column.
Thank you, Raj.
Only I won't recommend revocation, because supposing on 30th of September he is furnishing audit report and on 2nd of October he is revising it. If you revoke earlier one, फिर आपका वो due date के बाद में हो जाएगा. So it is better that you don't require, you generate another UDIN.
Correctly said.
That is a very valid and technical point, sir.
Yes.
So, sir, the next question is related to clause 44. The query is that there will always be a gap between GSTR 2A and clause 44. And GSTR 2A is not within the control of the company, and it is not possible to quantify the gap. And he's saying that please note that this information is not used for preparation of the computation of income. There are no disallowances whatsoever for mismatched or unreconciled amount. In view of the huge volume, it is neither feasible nor advisable to reconcile this information. Further, the time, money, and energy required to prepare this report will far exceed the benefits of the ultimate recipient, that is the Revenue Income Tax Department. And should we in clause 44 just mention that this is not required when the GSTN portal is fully automated and information can be shared between CBDT and CBIC?
नहीं, जो आपको पता है वो CBDT को पता नहीं क्या? तो not required लिखना ये नहीं होगा. But he is talking about the credit for GST, you know.
Yes.
So credit for GST, how does it impact the tax audit report? Because for GST, whatever you are collecting, you get the credit and balance payment you make. Now, supposing you have collected 10 crore, 9 crore is credit, so 1 crore you paid. Out of 9 crore, supposing 50 lakh, the person have not appropriately furnished their GST returns. Then, as far as assessee is concerned, he is entitled for that credit. Because of mistake of the person from whom he has purchased, he cannot suffer. So, as far as true and fair view is concerned, there is no issue with true and fair view, because even though 50 lakh is asset of the assessee, he is entitled to the credit. And as far as write-off is concerned, that decision for write-off will be taken maybe after some time, after making efforts. So, this question I don't know how it relates to tax audit, or how it relates for the purpose of true and fair view. It is the economic loss which the assessee is contemplating. Whether he has to consider it now or later is the question. And I'm sure that no prudent assessee within 6 months of close of financial year will consider that if some amount is not, he is not getting credit, he will pay from his pocket. I think that will not happen. So the question needs a refinement exactly what is the angle of the querist. So if he has asked online, maybe he can refine in chat box.
Thank you, sir. We have next question for Raj Chawla, sir. Sir, in a case if the assessee becomes liable for registration under the CGST Act within the year, but he remains unregistered at the time of tax audit report submission, is it required to include this information under clause 4 of the tax audit report?
Yes. The auditor must report in form 3CA or 3CB, whichever is applicable, that the assessee was required to be registered under GST, but he has not registered. It is the duty of the auditor to mention there to safeguard himself.
There is one another standard on auditing, that is NOCLAR, non-compliance with other laws and regulations. That also the chartered accountant may examine. There also this responsibility is mentioned.
So my next question is to Chitle sir. Sir, we have noted that notices were received under section 143(1)(a) for inclusion to business income for other income declared in para 16D of the report as other income not credited to profit and loss account. Additions were also made and demand was created. Sir, please explain whether income already falling under the other heads has to be reflected or not in the report.
What is the question asked? In tax audit report, it says any other income not credited to profit and loss statement. So if it is account of a proprietor, he is receiving some interest, some rent, or maybe interest on PPF account, which is maintained in business accounts. In that case, this reporting is made because this is other income which he has received, but it has not included in profit and loss statement. So the correct reporting would be to mention this particular amount under 16B. Now, this is the erroneous programming by the income tax department that they are directly adding it. But there is some mechanism, I was told, that you add it back to the income and then consider deduction somewhat from income tax. That was being mentioned by one chartered accountant. Actually, I am not much tax heavy, but maybe if we get some information, we'll put on TAQRB website. But reporting has to be made. The error is at the end of income tax department. And when Raj Chawla ji and myself were on direct tax committee, we have made several representations to Infosys and also to the income tax department. They have admitted that this is an error, but till today it has not been corrected. Hello.
Next question is for Raj
आम्ही
sir.
सेमिनार मध्ये 8 नंतर
So suppose ABC LLP has achieved a turnover of 2.5 crores during the assessment year 2022
Hello.
in the context of tax audit.
हाँ.
Which option from given
त्याला
choice
म्हणून मला फोन करत.
in clause 8 form number 3CD?
Under clause 8 of form number 3CD, the option third proviso to section 44AB should be selected by the auditor, because according to section 34(4) of the LLP Act 2008, the accounts of every LLP should be audited in accordance with Rule 24 of LLP Rule 2009. Any LLP whose turnover exceed in any financial year 40 lakh rupees or whose contribution exceeds 25 lakh rupees is required to get this account audited.
Thank you, sir. Chitle sir, next question is for you. What is to be included in calculating the gross turnover or receipts from businesses where GST is grouped under duties and taxes in the current liabilities? And also, how is the inventory to be valued inclusive of taxes as per ICDS 2 and the same to be reported under section 145A?
No, what is the first question? Turnover.
What is to be included in calculating the gross turnover from business where GST is grouped under duties and taxes in current liabilities?
It is not only grouping of GST under current liabilities, it is also collecting GST separately. If you are collecting separately and crediting it to balance sheet, then in that case, the turnover will be excluding the amount of GST. But if you are making one bill inclusive of GST, like in case of restaurants, supposing if you buy masala dosa, then for me bill will be 100 rupees. Raj Chawla orders always special masala dosa. So bill for him will be 200 rupees. So both these amounts will be inclusive of GST. In that case, if you separate out GST and account for separately, it will not be considered because you have not billed separately. So if you have billed separately and accounting for in balance sheet, that will not be considered as turnover if you are accounting for it as a liability. And secondly, it is asked about valuation of inventory, whether it should be inclusive of taxes. The answer is yes. If you are following 145A, it has to be there. But if you are following accounting standards, the profit and loss statement cannot include duties and taxes, in respect of which you get any credit subsequently. So supposing you are paying excise duty on goods imported and you are not going to get any benefit out of it, then that excise duty will form part of your purchases, will form part of closing inventory. But if you are paying GST, then if you are going to get credit out of it, then that GST will not form part of your purchases or inventory as per AS2, the accounting standard.
Thank you, sir.
Sir, my next question is for Raj Chawla, sir. Sir, when an assessee is availing the new tax regime and opts to pay tax under section 115BA, 115BAA, 115BAB, 115BAC, and 115BAD of the Income Tax Act, under which clause the fact is to be reported under the tax audit report?
In the given fact, the assessee, in this case, the assessee has opted for new tax regime, which is to be reported under clause A of clause 8 of Form 3CD, because assessee is required to pay income tax at the rate specified in the Annual Financial Act. However, Section 115BA, 115BAA, 115BAB, 115BAC, and 115BAD provides option to the assessee to pay tax at a special rate and forego certain deduction, exemptions, etc. The assessee can opt to pay tax under the rate prescribed in the Finance Act or the one made available by any of the aforesaid sections. The tax auditor has to mention whether the assessee has opted for taxation under any of the aforesaid section, and in case answer is yes, then he has to select the appropriate section.
And after having selected appropriate section, if he notices that the form has not been filed because he has to file a form opting that special regime, then he has to mention in para 3 of Form 3C A or para 5 of Form 3CB that this particular option requires furnishing of this particular form, which has not been furnished by the assessee. However, assessee has taken stand that he is covered under this regime, because if form is not furnished, then he will not be considered as having opted for that regime. So, some care has to be taken by the auditor where form has not been furnished.
So my next question is for Cheetla, sir. Sir, when the assessee has more than one businesses at different places which are liable to tax audit, whether he has to obtain tax audit reports separately for each unit by different tax auditors?
Tax audit, he is having two different businesses. Units is different and business is different. When two businesses are there, there will be two financial set of books of account and two financial statements. So when there are two financial statements, he has to obtain two tax audit reports. Whether from same auditor or different auditor, it is his choice.
Okay. Sir, the next is in case of clause 26, whether to report the prescribed nature of expenses incurred during the year or only about the amount outstanding as the balance sheet date. And in clause B, in case of clause 27,
26 clause क्या है?
26 Sir, it talks about in respect of any sum referred to in clauses A, B, C, D, E, F, or G of section 43B, the liability for which pre-existed on the.
So, what is the question?
The question
Where
is
is the question क्या है?
whether to report the prescribed nature of expenses incurred during the year or only the amount outstanding at the balance sheet date.
No, it is required that even prescribed nature one has to specify. And it would be more relevant from next year, because in case of payments to small scale, this micro and small industries, even payment post balance sheet date is also not allowed as a deduction. So nature will be required.
The next question is in respect of clause 27. The Senate credit reporting is to be done as per the books of accounts or as reported in SGR 3B. If
ये
it,
एसीआर वो जीएसटी का है कि सेनवेट का है?
sir, clause 27,
नहीं एसीआर 3 भी जीएसटी में रहता है कि एक्साइज में रहता है?
GSTR 3 भी GST में रहता है.
हाँ, तो जीएसटीआर का कोई यहाँ पूछा ही नहीं है, तो जीएसटीआर तक में बताएंगे.
ठीक है. And the next question is, if a charitable trust has a business activity as part of property of the trust, the audit report in Form 10B is not yet prepared by the SSE. As the time for filing audit report of under 10B is now extended to 31st October. The business activity attracts audit under Section 44AB, which has been completed. In this case, would it be correct to issue tax audit report in Form 3CB, since audit report in Form 10B is yet to be completed?
The Form 10B and business has got nothing to do. Under Section 11, I believe subsection 4, there is specific condition that when the property of charitable institution includes a business undertaking, separate books of account are required to be maintained. And when you are doing tax audit, the tax audit would be of those books of accounts separately maintained for business, for which the due date is 30th of September. So you need not wait for 10B, because in 10B you have to report this particular business income. So unless you conclude that business accounts and income, you won't be in position to prepare Form B, 10B. But for preparing Form 3CA, you are not required to have Form 10B, 3CA, 3CB, or the 3CD.
The next question is for that, sir. Mr. Akash is practicing medical professional and has professional receipts of 38 lakhs. So as per Section 44 ADA, 50% of the total receipts are treated as profits, and if profit is less than that, books are required to be audited. Now, if we are showing profit less than 50% of the professional receipt, thus TDS provisions are applied, as his professional receipts are less than 50 lakhs.
TDS provisions to individual or HUF are applicable only if the accounts of the assessee are audited under Section 44AB. In the given case, as the turnover of the assessee is less than 50 lakh, which is the limit for a professional, so whether he is declaring profit less than 50% or more than 50% under Section 44 ADA, then TDS provisions are not applicable.
Thank you, sir. Next question is for Chitle, sir. So clause number 17, in case of builder where sale of flat is less than the stamp duty value, in this case, audit report should report this fact in the audit report.
See, what are the titles of those columns?
Uh,
It is, yeah. Titles are what is the transaction value and what is the ready reckoner value. So if the ready reckoner value is more than transaction value, he has to report it. He is not supposed to consider the valuation report.
No, actually the question is if the stamp duty value is less than the actual sale value.
नहीं, less than रहेगा तो नहीं ये करने का ना. Stamp duty value, if it is more than actual value,
Sorry, stamp duty value
then
is
it
more
is
than
required to
actual.
report.
So we should report this in audit report also.
Yes.
Okay.
No, you are required to. You should know. You have to. If you don't report, then you will be under the jurisdiction of Raj Chawla as a chairman of TAQRB.
Okay. Thank you, sir.
So my next question is for Chawla, sir. Sir, is filing of ICDS in Form 3CD mandatory or optional? Similarly, is the inclusion of GST information mandatory or optional?
In both the cases, the information are mandatory because filing of ICDS under clause 13D EF of form number 3CD is mandatory. Further, as per the guidance note on tax audit, heading of column 326 and column 7 of table given in clause 44 of the form number 3CD requires reporting of expenditure in respect of entities registered under GST and expenditure relating to entities not registered under GST respectively. Thus, the expenses which are within the scope of GST, which tantamounts to supply in terms of Section 7 of the CGST Act, are only required to be reported under this clause in any of the column from 3 to 7.
In fact, just to extend it, there is no question out of 44 which is optional. Each question is mandatory. Even question number 7 relating to partnership deed, profit sharing ratio, it is compulsory in case of a company. Question relating to dividend is also compulsory in case of sole proprietor, in case of partnership. You have to answer that that question is not applicable. You cannot leave it blank, that it is optional. So you have to answer it. For a company, since it is not a partnership, it has to report under the question relating to partnership that being a company, this clause is not applicable. They cannot treat that this is optional and they need not respond. That is not the case. Each of the 44 questions have to be responded.
Sir, we have a question from a member. He is asking if a company has a turnover of just rupees 10 lakhs, then whether Form 3CA is required to be filed as per the third proviso to Section 44AB.
No, Section 44AB starts with turnover. No? So if turnover exceeds 1 crore, then it comes into play. If turnover does not exceed, then there is no question. Because Proviso 3 says that it would be sufficient compliance if you just give Form 3CD. It does not say that you don't give Form 3CA. But for giving Form 3CA, first the turnover bar has to be exceeded. The proviso said that you need not audit your accounts because accounts are already audited. That's all. But applicability is for turnover.
Sir, we have a question. In a cooperative credit society, there is a repayment of loans by members to society and repayment of deposits by credit society to members. Whether same needs to be reported under clause 31 of tax audit of Form 3CD?
Yes. They are not cooperative banks. They are credit societies. So no exception.
So next question is for that, sir. While checking bank reconciliation statement, we found checks are drawn at the March end and cleared in April 1st, last week or May 1st week. Do we need to exercise professional skepticism that this is for window dressing current ratio or avoid payment of interest in micro and small enterprise MSME Act?
Yes, this is a very important point because under the Income Tax Act and under the Companies Act, it is the duty of the auditor to check whether there is delayed payment or not. Delayed payment for more than 45 days. Because in this case, the auditor has to report in his report that this payment towards registered MSME, not to all MSME, but to the registered MSME, whether this payment is delayed or not. Because interest provision is also there. The assessee has to provide interest 3 times the bank rate on monthly compounded rate. So this is the provision. So the assessees are very clever. So although they make payment in the month of April or May, but they show that check was issued on 31st of March or before that, so that it comes under the bank reconciliation statement and it does not come under the financial statement of the assessee. So it is the professional skepticism is a matter of judgment. So this auditor has to decide to save himself whether this payment is made only for adjustment or actual payment is made, but due to some other reasons, the check was not deposited by the party in his bank account. That may be delay due to this reason.
Thank you, sir. Chitle sir, there is one question. Whether the tax audit is mandatory for every company under Section 44AB whose gross turnover exceeds 1 crore, or the benefit of exemption from tax audit under Clause A of Section 44AB, which is also applicable to private limited companies, is also applicable to private limited companies. That is limit of 10 crores.
No, for a company, if it exceeds turnover of 1 crore, it is mandatory. And for all assessees, if the turnover is up to 10 crore and that 5% receipts and payments are up to 5% otherwise than by banking channels, then the provision of tax audit are not applicable. 44AB are not applicable. So they are not applicable to all assessees, not private or public. or partnership. It is not applicable to all associates.
So this is applicable for private limited also, right?
Yeah, company, private, public, no distinction.
Thank you, sir.
So my question is for Raj sir. Sir, whether sum payable to Indian Railways for advertisement at railway stations would be disallowed under section 43B?
No, this is a allowable expenditure and it should be allowed.
Chitle sir, this is for you. Whether we should report liability written back under clause 14, which is required under section 41. When we show it here, then this is added back to the income while computing taxable income, while such income is already shown in the profit and loss account.
See, as far as issuing tax audit report is concerned, one should not focus what will happen in assessment or what will happen in intimation. If that particular write back is covered under provisions of section 41, then it is required to be reported. Now, supposing some interest to the bank, you have made provision of 10 lakh rupees, and ultimately you are required to pay only 6 lakh rupees, so 4 lakh rupees you have returned back. Then the issue will arise whether it should be reported or not. So their provisions of section 41 do not attract, because it says that if any benefit is received by the assessee and subsequently, if any expenditure is claimed by the assessee and subsequently he gets the benefit. Here, because for 10 lakh rupees, he has not got any benefit because it was disallowed under section 43B. When he pays 6 lakh, he will get deduction of 6 lakh. For 4 lakh, he never got the deduction, so it need not be claimed. But if it is purchase of 10 lakh rupees where he is paying 6 lakh and settling the claim, earlier when he debited this particular amount of 10 lakh, he has received the benefit. He has received the deduction. So when he has received the deduction and he is adding back, he has to report it. Now, what happens in assessment? In assessment also, it will not be included if he has already credited to profit and loss statement. But the error of income tax department programming should not be corrected by making another error in tax audit report. For income tax department, you cannot charge penalty, but for making error in tax audit report, the chartered accountant is in the disciplinary jurisdiction of ICI, also under penal jurisdiction of income tax department, because if income tax department takes a view that this is abatement of say under reporting, then for that even chartered accountant can be penalized by the income tax department.
Sir, if the assessee is following cash basis of accounting, is it reporting? Is the reporting under ICDS applicable?
Yes, it is applicable, because as far as accounting standards are concerned, accounting standards are for accrual basis of accounting, but ICDS are for computation of income, irrespective of the method of accounting followed.
Chitli sir, under which clause of Form 3CD the building purchase without consideration is to be reported?
Building purchase without consideration, so it won't be purchase, no, it would be gift.
Yeah.
So maybe any income not credited to profit and loss account, because if you have received this building free of cost, that is your income. So under section 56 to 10, it is immovable property exceeding.
Charitable institutions, if they receive some building.
Charitable institutions, if they are doing business, then different. Charitable institutions are not doing business, so tax audit will not be applicable to them. Okay. If they have received, say, educational institution receives a building, then so be it. It is income under section 11 read with section 224. But reporting is not required. If 10BB asks question about that, donations received in kind. So there, if you are issuing 10BB, you can mention.
Okay. Thank you. That's in case of primary agriculture cooperative credit societies are accepting various types of deposits like saving deposit, recurring deposit, time deposits from its members. So is section 269 SS of the income tax applicable on them?
Yes.
They
if they are expressly spared, then fine. But if they are not expressly spared, because they are not banks, they are credit cooperative societies.
Okay.
But so just check in 269 SS आपके यहाँ book हो तो.
But sir, there was a change in the finance bill 2023, which is applicable from 1st of April 23, that this 20,000 amount has been substituted by 2 lakh rupees. For
Exactly, but yeah. So the amount is changed, but it is not that they
Yeah.
are spared from this section
This
altogether.
is applicable, yes.
Yeah, applicable.
Applicable. Next.
So, Chitle sir, we have a question in which he's saying that due to nature and complexity of the business of the SSE, we do not have quantitative information about the stocks. The software is not accepting any comment and it is accepting only numeric value. What should we do?
Para 3 of Form 3C or Para 5 of Form 3CB. There you have to mention.
So he has not mentioned any form, he is just mentioning software.
No, I understand that in form, wherever numeric values are there, you can only put numeric values. You cannot put any comments. That's why if you read the guidance note at the beginning itself says that because you cannot state any other things other than numbers or yes or no, which is supposed to be answered under a particular clause. And you want to either amplify or you want to delimit your responsibility or you want to put a qualification, it is to be placed at para 3 of Form 3CA or para 5 of Form 3CB. That is given in guidance note. So if assessee has not maintained quantitative details and therefore he is not able to report, ultimately he will have to mention at these 2 places. But while he does so, he will also be exposed to a question that without this quantity record, how did he satisfy himself that true and fair view of financial statements has been reflected? So that also he should keep ready in his working papers, how he relied on those accounts.
Thank you, sir.
So what is the audit procedure to be followed to verify whether tax is deducted on specific amount of expenses where the client has voluminous transactions?
नहीं वॉल्यूमिनस रहने दो या कम रहने दो, मेथड तो सेम ही रहता है. In case of voluminous transactions, generally what I have seen in profession is they are mentioning in this para 3 or 5 of 3CA, 3CB that due to volume, they are not able to verify entirely. So they try to delimit their responsibility. But as far as tax audit is concerned, for voluminous or not so voluminous, there are no different procedures, same procedure for all.
Thank you, sir.
So we have a question that shall we match the expenditure mentioned in clause 34A of the Form 3CD with the total expenditure in financial statements and compare data filed in TDS returns?
See, ultimately, whatever gives you comfort that whether appropriate TDS has made or has not been made, all such steps will have to be made. So if this particular exercise is done about reconciliation and working papers are available, then maybe assessee, maybe chartered accountant is protected. Because if you look at the non-compliance with standards or being guilty, it is guilty for gross violation, gross misconduct. So for error of judgment, the chartered accountant is not considered as guilty. For gross negligence, he is considered as guilty. So he does all these things. Now, supposing take example of payment exceeding 10,000 otherwise than by account pay check. There are 1 lakh transactions. Now, out of 1 lakh transaction, if he has followed certain methodology, in audit program it is there, supposing 2 of his assistants has done it, and still maybe out of they reported 10 and 2 were missed. So there one has to examine whether he was grossly negligent or he was not able to trace those particular things. So if he employs software to detect these things and software also doesn't catch couple of payments, then he will not be considered as grossly negligent because he has taken care. He employed software and that software had some limitations which maybe he was not aware at the time he used. So that way one has to consider. So this matching of total expenditure, etc., may go on supporting view that he was not grossly negligent. He has performed his duty well, but still certain errors remain.
So my next question is related to liquor business. In case of a liquor business, purchases can be made only from authorized person of government. For this purchase of liquor, challan is deposited in cash to the authorized person of 3 lakhs. Whether this 3 lakhs is disallowable under section 40A3 or 40A3A, that is cash payment greater than 10,000, or this payment is exempt as it is made to authorized person of government.
I think Rajbhai is expert in this subject.
You are the expert. You are the chairman.
नहीं पर business आपके expertise वाला है. Anyway, see, ultimately, if the purchase is for government, if the payment is to the government, then these cash payments to government are not considered in violation of 48.3. But if it is made to anyone else, then section 48.3 applies. Because supposing if earlier question you asked to Rajbhai that payment made to railways for advertisement. So there, railways are run by a department of government. It is not a separate company. So he said that yes, if payment is made to Indian Railways by cash, it is allowed. But same payment if you made to any state transport undertaking, then state transport undertaking is not government. So there the same answer will not prevail. You will be caught by those provisions. Now coming to this question of payment in cash to the liquor dealer, whether there is violation of section 48.3, the answer is yes, there is violation of section 48.3. Now considering whether that expenditure will get disallowed, the answer is no, the expenditure will not get disallowed. Because when earlier section 48.3 was enacted, there was a challenge under Article 14 of the Constitution that there is unreasonable restriction on carrying on business. Because when I carry on business, it is my prerogative whether I should make payment by cash, I should make payment by check, etc. So there, when the matter went before Supreme Court, I think that case was of Sarjadanand or some other case. So there, before the Supreme Court, the Income Tax Department argued that we are making this provision to ensure tax payment. So the person to whom payment has been made, whether he is paying taxes or not, that we want to consider. And in Rule 6 DD, we have made one clause F, where under unavoidable circumstances, if you make payment in cash, we will allow it. So based on this exception, the Supreme Court held that this provision of section 48.3 is constitutional. Now subsequently, this particular clause that for any other reason has been omitted. But does it mean that because of omission of that clause, if you make payment in cash and if you are able to demonstrate that the person to whom payment is made in cash has filed his return of income and has reported his income, if that is demonstrated, then the expenditure is not disallowable. It has to be allowed. And to that effect, you may refer decision of Gujarat High Court in case of Anupam Teleservices, where they made payment in cash to Tata Telecom. And there they were able to demonstrate that whatever cash payment was made to that telecom company, it has included it in their profit and loss statement and tax is paid on it. And on that basis, considering the Article 14 and the earlier commitment given by CBDT, the expenditure were considered as allowable. But because you consider payment as allowable, that does not mean that whatever question is asked in section 48.3, you have to take a call. The call will be taken by the assessing officer. You have to just report that the payment is made exceeding 10,000, otherwise than through banking channels.
So we have a live question. In case of transaction with MSME, it is mentioned that if payment is not made within 45 days, the interest provisions of MSME Act will be retracted. If I read section 16 of the said Act, it is stated that in case where there is agreement for payment of invoice, the credit period cannot exceed 45 days. However, where there is no agreement and if the invoice is disputed, then the payment has to be made within 15 days. So if I understand this correctly, where there is no agreement with MSME vendors, then the payment has to be done within 15 days and not 45 days to avoid interest implications. Is the understanding correct?
Yes, this understanding is correct because the maximum time limit given for delayed payment to the MSME is 45 days. If there is no agreement, then 15 days is there. But the agreement cannot exceed 45 days. Suppose people says that actually we have this 3 months agreement. Whatsoever maximum agreement cannot be more than 45 days.
Thank you, sir. Next question for Chidle, sir. When categorizing expenses in clause 44 of Form 3CD, should the purchase of liquor for human consumption, which is not included in GST, be disclosed as expenditure related to entities not registered under GST or expenditure related to goods and services exempt from GST?
This liquor is exempt from GST. No? I am not expert in GST, but then I believe that whatever is covered under VAT is not covered under GST. So it has to be exempt under GST. If it is not exempt, then it will become as unregistered. But then there is no guarantee that the liquor supplier is also not registered on GST. He may be registered. He may not be paying GST under this alcohol. But in any case, I'm not aware of exact provisions of GST.
Thank you, sir.
So the question is, in the financial year 2020-21, ABC Limited has declared a net profit before tax of 60 lakhs and a net profit after tax of 42 lakhs. In the context of calculating the net profit ratio as stipulated by clause 40 of Form 3CD, which of these profits should be disclosed?
I just asked about that alcohol to the chairman GST committee, and he informed that alcohol is excluded from GST.
So it will be shown as
Sushil Kumar Goyal answered that alcohol is excluded from GST.
so it will be as not registered under
It
GST.
will be exempt from GST.
Okay. It will be exempt or not registered?
No, now supposing you are selling only alcohol, purchasing alcohol and no other expenses, then since it is excluded, you may not be required to register under GST.
Yes. Okay. Okay. Thank you.
So the next question is, in the financial year 2020-21, ABC Limited has declared a net profit before tax of 60 lakhs and a net profit after tax of 42 lakhs. In the context of calculating the net profit ratio as required under clause 40 of Form 3CD, which of these profits should be disclosed?
Net profit is always before tax when you are comparing for ratio.
Thank you, sir. So under clause 42 of Form 3CD, do we
And
need...
in any case, the manner in which you are employing net profit in Form 3CA, 3CB, you should amplify that in net profit. We have included this. Even guidance note says that when you are using particular figures for ratio, you have to amplify that how you are arrived at that particular figure. So when you are considering net profit, you have to state that net profit is considered before tax.
Thank you, sir. Sir, under clause 42 of Form 3CD, do we need to attach Form 61A with the tax audit report? Further, whether we need to verify the information furnished in Form 61A?
No, what is question? You just read question from tax audit report. No? They don't say that you attach form.
Yes, sir. There is no requirement to attach.
You read for the benefit of audience. No?
The clause 42 states whether the SSE is required to furnish statement in Form 61 or Form 61A or Form 61B.
So you have to check whether he is required to furnish.
Okay.
They don't say you have to attach. And when he has furnished it, you have to rely on it after seeing the acknowledgement. You cannot, if the assessee answers yes, you cannot rely on his answer. You have to see the acknowledgement.
Okay, sir. Thank you, sir.
So whether the tax audit is applicable in case of loss in partnership firm having turnover less than 1 crore,
Which partnership firm?
normal partnership firm.
Only partnership firm.
In case
So
of
there
loss,
is no, sorry,
in case of loss,
not applicable to my mind.
Because profit and loss does not matter. The matter for conducting the tax audit is turnover. If the turnover is more than 1 crore, tax audit is applicable. If turnover is less than 1 crore, whether there is a profit or loss, it does not matter.
There is another provision, section 44 AD says that if your turnover is up to 2 crore and you are not reporting profit up to 8% or 6%, then you have to get your accounts audited. But that section says that if your income is above the threshold limit. So here in case of a loss, the income is below the threshold limit. So tax audit under clause 44 AD also will not be applicable.
okay, sir. Thank you.
Thank you, sir. Sir, in case of proprietorship and partnership firm having turnover of more than 2 crores, but less than 10 crores, and cash portion is less than 5%, whether tax audit is not applicable even if the profit is less than 6% or 8%.
If you can read the proviso to section 44 ABA, provided that they are stated. (44) ABA says that if the turnover exceeds 1 crore rupees, then tax audit is applicable. And what the proviso states? The proviso reads that you have to substitute 1 crore by 10 crore if two conditions are satisfied. Number one is your receipts are up to 5% otherwise than by banking channel, and your payments up to 5% are otherwise than through banking channel. So there, the tax audit is not applicable. So no further condition, whatever be your percentage of profit.
Sir,
And when your turnover exceeds 2 crore rupees, even you are not covered under 44 AD. So if your turnover is 5 crore rupees, you are reporting say 2% profit as a turnover, tax audit is not applicable.
So cooperative societies sales fertilizer, pesticides, seeds to members, and then they provide loan to their members on which interest is received deposit. Suppose sales are 40 lakhs, interest on loan are 40 lakhs, and interest on deposits are 40 lakhs during the financial year 22-23. Whether the said society is liable for tax audit?
Yes.
Okay.
Because this is not income from other sources. This is their business.
Yes. Okay. So one of my client, actually a limited company, has adopted Ind AS. So according to Ind AS, they have revalued the assets and booked the profit on revaluation in the profit and loss account. So while calculating the turnover for tax audit purposes, should that be included?
For the purpose of considering qualification for tax audit, to my mind, it should not be included.
Okay.
Because this is capital receipt, no, sort of capital receipt, because he has revalued assets, no?
Yeah, revalued asset investments.
So exactly. So if he has revalued investments, it is not business turnover.
Okay.
Even if he sells assets, it will be capital gain, not business income. And if it is business income, supposing you have business income of say 50 lakh rupees and your sale proceeds from say capital asset 5 crore rupees, still tax audit is not applicable because that goes under different basket.
So we have business profits of business turnover.
No, we are not on that. I am saying that even otherwise that doesn't come as a business receipt. It comes as a capital receipt.
Okay. Thank you, sir. One live question, last question. A wholesaler.
No,
of-
Rashi is not in that hurry. If there is second last question, doesn't matter.
A wholesaler of the company, suppose the turnover is more than 500 crores, can take benefit of MSME.
No, maximum limit in the MSME is 250 crore because there is a 3 category under MSME. First is micro, where turnover is less than 5 crore. Another one is small, where turnover is less than 50 crore. And the last one is the medium, where the maximum turnover is 250 crore. If your turnover is more than 250 crore, then you are not covered under MSME Act.
Thank you, sir. Rashi, over to you.
Yeah. As the tax audit due date is approaching us very quickly, I hope this webinar must have been really helpful for everyone, especially the professional chartered accountants. On this note, ladies and gentlemen, as we conclude this webinar, I extend our heartfelt gratitude to our esteemed speaker, Chairman Sir C. Raj Chawla ji and Vice Chairman Sir C. Chandrasekhar Chitale ji for their insightful presentation. We also thank our moderators, C. Abhishek Aneja and C. Vikas Katyar, for their seamless coordination. Special thanks to our attendees and the event organization team for their contribution to its success. Your participation and dedication have made this webinar a valuable experience to all. Thank you, and we look forward to your continued support in our future endeavors. Thank you so much, everyone.
Thank you, everyone.
Thank you.
Thank you.